So this US 30 analysis for Monday, the 12th of February. Now, let's have a look what happened price, where price may likely go. So early in last week, we've had this very strong sell-off in the US 30. We've had a recovery, brief pullbacks. Had this move down, had a move upwards. Now, it was concerning. What was concerning me was this pullback here. And what we did see in the end, I don't think I pointed this out. I don't think I did. We had a head and shoulders pattern here on the hourly time frame. So we've got our shoulder, head, shoulder, bearish chart pattern. We saw the further sell side momentum come into the market. So sell side momentum, brief consolidation, foreseeing that further sell side momentum. We didn't make new lows. So potentially we've got our lows here, higher low. So we could see further upside continuation on the US 30. So we've had to move downwards. Posted these two pin bars, with one making, the most recent one making a lower low. Had these two very strong bullish candles. We've had a gap up in the market, which is a somewhat bullish sign. So we could potentially see prices head back up towards this level just here. Let's see where it is. Our most recent, where we had our shoulder here on the previous head and shoulders pattern. So in around that 24,905. We could potentially see price head up towards that 24,905. So in around this level, 24,905. Successful break from which we're looking to see prices head towards our most recent highs in the market in around that 25,200. In around 25,200, we do have to be aware of the fact that we do have the 200 period moving average potentially acting as dynamic resistance. Could see prices head back down towards that 24,800, 24,900. A successful break from which we'll be looking for prices to head back down towards this 24,600, is it? Yes. Would it be? No, sorry, 24,200. In around 24,200 where that gap fill is. Now, the markets have been particularly volatile, so we do have to, our ranges are going to be possibly be larger if we do maintain our volatility. So if we can trade above this 25,200, the swing in the market just here in around this 25,500, break from which we're looking to see our prices react around the 400 period moving average. 400 period moving average currently sitting at, let's just have a quick look. Our 400 period moving average is currently sitting at 25,696. So again, if we do get all the way up there, it's a potential there where we could see sell side momentum. So we've got to be aware of this shoulder here, the head, this swing high in the market, as well as the dynamic level of the 200 period moving average. Successful break from which we have to be aware of the 400 period moving average. Now, beyond the 400 period moving average, let's just have a quick look. I suppose obviously we could have the 26,000, and beyond the 26,000, we've obviously got the. Let's just have a quick look. Let's get my drawings back on the charts. Beyond 26,000, we've got 26,165, 26,268, and 26,320. Wouldn't anticipate prices moving much beyond, say, 26,320. And again, to the downside, the levels are going to be pretty obvious. So our most recent, we've got this potential swing low. We've had this consolidation in the market. Let's just have a quick look where that is. Just bear with me a second here. Just going to hide the drawings again. So we've got our most recent swing lows here in around this 23,817. Successful break from which we'll see our price rectoring around our lows in around this 23,350. And our most recent swing low in around the 23,112. These are all levels that we could potentially look at for seeing swings in the market where we could potentially find support if we do see that sell side momentum come into the market. So even though we've had a gap up in the market, if we do see that sell side momentum again, we'll see our prices reacting around 23,008 in around this mark here, 23,800. Successful break from which we'll see our price react around these previous swing lows here in the market, where we do see that bullish buy side momentum re-enter the market, and again looking for resistance at these swings in the market also. Now, with that said, let's just have a quick look at the higher time frame. So if we head over to the monthly chart, I suppose it's not going to tell us anything we don't already know. Over to the monthly chart. As we can see here, we're in a very strong uptrend on the US 30. Since our swing lows down here, we've had a very strong move to the upside on the US 30. So we had the exhaustion candle, which we mentioned. We've been mentioning it in the month of January. The 1200 points plus move on the US 30. So we were expecting our lows of 24,711 to be tested. And as we can see, we've traded well below that. We traded into the 23,000s, well into the 23,000s. So that setup was a valid one, and it did play out the way we wanted it to. Now we'll see how this month of February finishes, and whether we do see a bearish close. We've had this very strong run up, so seeing a retracement. Before seeing that further upside continuation, and wouldn't be too unusual. Possibly even a pullback down towards the 20-period moving average, but 20-period moving average is so far away. It would require quite a deep retracement here on the US 30, deep in the context of the most recent trend, because currently the 20-period moving average is sitting at 21,305, and considering that the fact that the market was up trading at in around the 26,000 mark, pretty close to 27,000. You're looking at about 5,000 points or so. It's about 4,000, 5,000 points or so. Pullback, which would be a pretty sizable pullback. I suppose you probably get a lot of people panicked, but I suppose it'd be a reasonable pullback down towards a moving average before seeing that further upside continuation. We do have to bear in mind that indexes such as the US 30 or the Dow Jones, as some already know, do have a long bias. And what I mean by that is more often than not, the market goes up over time than it is likely to go down. So even if we do see that retracement over time, the market will go up. Further highlight this. Let's just have a quick look here. So if we were to say zoom out on this monthly time frame, I'll scale out a bit. As we can see, ever since I've got records from 1971. As you can see here, even though we've had the retracements here and there, had a couple of retracements here and there, overall, this market over time goes up. That's what I mean by the market has got a long bias, unlike currencies, which more often not range, oscillating between points, unless there's a strong fundamental shift. So overall, if we do see that pullback down to 20 again, potential opportunities, but this market does have a long bias to it, even though we are seeing this retracement so far and quite a bit of market volatility. Now, overall, on the monthly time frame, we're still in an uptrend, potentially putting a bit of a top here, having the bullish exhaustion candle in January, and having the sell side momentum come into the market end of January, February. So we'll see how prices develop, where we do see that retracement and before we see that further upside continuation. If we could see that upside continuation without seeing a particularly deep retracement, this might just be a similar scenario to this previous area here, where we did have 1,200 points candles being posted. So in this area, we had a 1,200 point candle, to bearish one, after which we saw a bullish candle. We didn't see another 1,200 point candle, but we then invalidated the bullish candle by trading below its low. And in this case, we trade above the high of the bearish candle, which was 1,200 points. And we saw the further upside continuation, very strong trend. So we didn't see a deep retracement. What we saw is a period of consolidation, small pullback, a bit of consolidation, not a deep retracement before we see our upside continuation. And again, all we've had is merely pullbacks. We've not seen deep retracements before having that strong upside continuation. So let's just have a look at the weekly time frame, because we want to just wrap this all up. On a weekly time frame, we can see here we've posted two very weak weeks, and we've had these very strong moves to the upside. We've had this weak week. Actually, I'm going to change my wording here. So we've got this very weak candle, because I shouldn't say weak. We've got this bearish candle, and we've had this more recently, this bearish candle with a very large range. We've had quite a bit of retracement at the end of the candle, suggesting that there is some buy side momentum. So we could see some retracement here before seeing that further downside continuation or retracement back up to go on to make new highs. We'll see how the retracement plays out, but we do look poised for further upside momentum in the short term. And let's just have a look at the daily time frame. So if I head over to the daily, As you can see here, we've had this move down, covered quite a distance over a very short period of time, because as we know, it's climbed the stairs and then fall down elevator shaft. So this is it climbing the stairs, and this is it falling down the elevator shaft. So we've come down on the daily time frame. We've come pretty close towards the 200 period moving average. The 200 period moving average here on the daily time frame is currently sitting at, let's just have a quick cheeky look. 200 period moving average is currently sitting all the way down at 22,855. Now, these wicks, we've got these very strong wicks to the downside, posted a higher wick there. So potentially this could be a higher low for further upside continuation. And we'll see how this play out, because we have seen buy side momentum coming to the market. As you can see, we've got these spikes in volume as well. So we could see that we could potentially have this being our bottom for now, and have a bit of a consolidation or some consolidative retracement before seeing that further upside continuation. But overall, the market is biased to the long side, but this most recent trend and this pretty much surge that we have seen in volatility, we're posting these large candles with these large ATRs. We'll see how this plays out, but we do appear to poise for further upside continuation over the short term, as we do appear to be finding support here on the US 30. And with that said, that pretty much wraps up the US 30 analysis. Thanks for watching.